Diane, how would you describe this? Is it abnormal? Is it funky? Are we just in a waiting period of transition? What do you say is going on here?
Well, it certainly is an early chill for the holiday season, but I think, consumers are still spending, which is ironic. The core retail sales, which goes into the GDP calculation for the retail sales data, actually was up 0.9%, so much better than that headline figure suggested. And data for September and August were revised up. So we came into this with consumers holding on, even though the labor market shows no change basically in payroll since April of this year. That's a long time to be stagnant. And we're seeing that unemployment rate, like Steve said, some of it was spillover effects from the government shutdown. We had more people entering the labor force. We had also more people having to go onto temporary layoffs. That was collateral damage from the government shutdown. We also have this late holiday season. It is all compressed once again into the month of December. Last year, that resulted in the strongest month for job gains of the entire year in the month of December, which I would not be surprised to see yet again this year. We also know going into next year, not only do we have those rate cuts by the Fed, but we have expansions to tax cuts that were retroactive to the beginning of 2025. That will add double-digit gains to tax refunds, and we know consumers treat those as if they're windfall gains, and that could make the inflation data look even stickier.
A lot of people are talking more positively about consumer discretionary stocks in some areas like that for that reason, Diane. But it's interesting what you said, and this uncertainty is reflected in the divide at the Fed, where you have those who want lower rates, you have those who are worried, we should be here. And to that point, in the flash PMI this morning showing firms passing along price hikes, I know some accuse this Fed of having political bias towards hawkishness. But I sympathize with the fact that we came out of this inflationary period that was horrible and arguably their fault. They want to finish the job. So when we see these data points, does it suggest to you that job is finished yet? And what should they do about that? You have a slowing, kind of churning labor market and stickiness on the price side.
Yeah, here we have a labor market with a one-legged stool. The healthcare and social assistance is driving all employment gains in the private sector. That's nothing to be excited about. I think we'll see more broad-based gains in the months to come, but will they stick? What I'm also worried about, though, is that even if we get a little improvement in the labor market, we're still going to have stickier inflation. And I think that is something, listen, the level of prices is what consumers care about. I saw Steve, nice job, Steve, with Austin Goolsbee. But, one of the issues that came up was, that we're normalizing inflation. We're 5 years in now, and we've seen inflation hikes. And even though you're supposed to look through the tariff-related increases in inflation, first of all, they're not all at once. They're coming sequentially, which is mimicking inflation and further normalizing inflation. At the same time, there's spillover in the service sector, which Austin pointed to as well. And I think it's important when you look at the hawks, they're not of just one political ilk or not. What we're seeing out there is a lot of people are concerned about the stickiness of inflation and the fact that the Fed has not been able to achieve price stability really in many years now. And that is something to worry about because along with uncertainty, it is also normalizing inflation, and it gives us this stagflationary nature, even though the overall economy adds up on paper to look better than it feels.